Hello and welcome to Trading with Rob. I am Rob. In this video I am reviewing my DAX daily markup for Friday the 19th of September 2025. So to start the day, just looking at the chart, this is a 5-minute chart, and we have the open of the day marked with the dashed green line, yesterday's high, yesterday's close, and today's close. To start the day gapped up with a gap of 55 points, and overall I saw the day as an immediate gap close followed by a bull trend to a measured move, then a bear trend, and a weak bull trend with a tight trading range going into the close. To start the day, we had a strong bear bar on the open. This was basically rejecting the gap, and with it broke below the 5-minute EMA and the 60-minute EMA. 5 minutes shown as the solid blue line and the 60-minute as the dashed blue line, and with it being broke below yesterday's high as well, and with it being so close to the yesterday's close, it's likely that it would have to reach it. There was a small pullback, but not quite reaching 50% of the initial bar, testing the 5-minute EMA, and then another bear bar actually closing the gap, testing yesterday's close. Then had a reversal after what was essentially a two-legged pullback to yesterday's close. Then had a reversal, and once we have a reversal, we can start looking at measured move targets. One measured move target based on the projection of the open to the low of the two-leg pullback from the open, basically doubling the range of the day up to the high, and that's obviously what happened with a wedge top at the measured move target. Then we had a bit of a reversal, which formed a series of legs, 1, 2, 3, forming a wedge, which was again testing yesterday's high. This formed a very tight bear channel, which can be considered a spike on a higher time frame, and we can consider that as the leg one of a potential two-leg move, with the projection going down from the pullback. The pullback to the EMAs was a series of bull bars, but after such a tight channel down, it's likely that the first pullback is going to fail. So it's reasonable to expect second leg down, and as we get a series of consecutive strong bear bars, again breaking down from the EMAs, both the 5-minute and the 60-minute, this is essentially a 3-bar bear microchannel setup, making lower prices highly likely. It's broken below both the yesterday's high and yesterday's close with follow through, another factor that's suggesting that lower prices are again very likely. We then, at the measured move target, had a micro double bottom. It's a very small pattern, but after such strong moves down, likely to be some profit taking and exhaustion from the bears, which led to a wedge pullback to the EMA. the 5-minute EMA, from which was another small leg down, forming a lower low double bottom, or a lower low major potential lower low major trend reversal, and a wedge bottom, small wedge bottom. After that, had a break up to the 5-minute EMA, and eventually 3 bull bars, consecutive strong bull bars, breaking above the 5-minute EMA and testing yesterday's close. These are essentially a 3-bar bull microchannel, long setup, and this was followed by a deep pullback, which suggests that a trading range is more likely than a strong trend. Obviously, then we've got several points that we can use to project a bear trend channel line, and then use that to drag down to a point between the two points used, and use that as a projection across. We then had a 2-leg move with a climactic bull bar breaking above the 60-minute EMA and the channel line, but 75% of 75% of with trend breakouts normally fail, and on failure we expect a test to the other side of the channel, which is again kind of what we got, although initially we had a tight trading range continuing for a couple of hours, which had the usual wedges and double tops, double bottoms that are normal in trading ranges. And I've just put on a couple of marked a couple of them. For example, there's one wedge here that's not marked, and potential wedges here. It is quite a tight range, so it might be better not to look to trade in this environment. Certainly not. It's more difficult with stop orders, and look for a breakout. There was an attempted breakout testing the bear channel line and yesterday's high, but was immediately rejected, and followed by a strong bear bar breaking below the 5-minute EMA and the 60-minute EMA down from the yesterday's close, testing the bottom of the trend channel, whereupon there was a retest of the bottom of the tight trading range, and then another bull bar going into the close. So overall, looking at the best stop order trades for the day, I think on the open, obviously we have a large bear bar going down, forming a 2-leg pullback to yesterday's close. On the reversal, it's reasonable to start buying above strong bull bars, looking for initially a test and potential double top with the opening bear bar, or potentially a measured move up. So on that, wanting to continue to buy above strong bull bars going up to the measured move target. Once we've reached the measured move target, it's formed a wedge. Start looking for reversals. First bear bar, it's a very tight channel up, so maybe wait to see if there's confirmation follow through. Not the best on the second bar, but another strong bull bar, delayed follow through a couple of bars later. Good to sell below. Looking for a test of the open to start off with, but as strong bear bars continue to form, shorting below them is reasonable, especially in such a tight channel, because we're always expecting that the first pullback is going to be minor, and that's what happened. We've got a leg one move followed by a potential second leg target quite far below. After the low one is formed, shorting below the strong bear bars, especially once we've got some consecutive strong bear bars with follow through, breaking down from the EMAs is reasonable, and continuing until we've got a situation where we might want to start looking to get long or start taking profits around the measured move target. After a small wedge pullback to the EMA, the 5-minute EMA, reasonable to maybe look to get short, especially since this is such a tight channel. It may have reset the leg count and further downward pressure might be expected. But obviously it was rather limited, and once we start forming a low double bottom with a wedge, potential lower low major trend reversal, can start buying. And once we've got a series of consecutive strong bull bars breaking above the 5-minute EMA with follow through, even if it is testing up to resistance, possibly buying above, because this is a very high probability trade. I don't think this one actually triggered, so as long as the market doesn't fall below the bottom of the 3-bar bull microchannel, it's reasonable to start getting long above any strong bull bars breaking up from the EMA after the pullback, although probably more for a scalp rather than a swing trade, because this deep pullback suggests that a strong trend is unlikely. Once we start getting resistance and at the trend channel line and a potential breakout, want to start shorting to look for a test of the other side of the channel, and then as the trading range continues, looking just to short at the upper extreme for double tops or wedges, and then looking to buy in the lower extreme, although because this trading range is very tight, it's probably better not to trade at all once it becomes clear that it's so tight. So overall, full summary of the day's chart markup with the trades included is summarized here. I hope you have found this video interesting, and thank you for watching.